basically, I did not test too much on SOFP and SOPL part. I only test you all on the conversion itself. So I believe everyone has might have traveled overseas before. So conversion to all of you, I believe it is something that is quite simple. Okay, so we move on to the first question. Question number 1. Florissant Berhad, whose year end is 31st December, buys some goods from Tut Limited in Singapore on a few occasions as per below. So the invoice amount on 31st March 2020 is SGD paid equally by 2 installments. Then the next one is 20,000, but only 15,000 was paid, partially paid. And the next one is 30,000 and it remains unpaid. So this is the exchange rate. Okay, so you are required to calculate the realized or unrealized exchange gains or losses arising from each of the above transactions and to explain 3 factors that an entity should consider in determining functional currencies. Okay, so this is the first question. They want you to calculate realized and unrealized exchange gain or losses. So under what circumstances it is realized, under what circumstances it is unrealized. Okay, so here, realized means that invoice already paid. Unrealized means that invoice remains unpaid or partially unpaid. Okay, so that's the difference between realized and unrealized. So if let's say the question mentioned to you, okay, so if invoice already paid or partially paid, so if it's partially paid, you calculate realized exchange gain or losses based on the partially paid part. For unrealized, it simply means that the invoice remains unpaid or it's partially unpaid. Okay, so if it's not paid or partially not paid, then you have to calculate the word, you have to calculate unrealized exchange gain or losses. Okay. Okay, so now let's move on. The first question itself, the invoice amount on 31st March 2020 is SGD 10,000 paid on 30th April. So now we need to identify the spot rate and also the closing rate. So I have briefed all of you just now that you must be able to understand the difference between spot rate and also closing rate. So according to the question, spot exchange spot exchange rate at the year end date. Okay, so spot rate simply means that it is the rate of the invoice. It is either invoice rate, invoice date, or order received date. Okay, or we call it as opening date. Okay, how do we define or identify the opening date? Basically, it's either based on the invoice date or based on the order received date. That is how we identify the opening date, or we call it as a spot date. All right, and according to the question, they received the invoice on 31st March 2020. So we assume that the spot date is 31st March 2020. However, when you come out to work in the future, then you must be able to identify either we use invoice date or order received date. How? Through the company's standard operating procedures. If the company tells you that, hi everyone, you have to, it is the company's, we will take in invoice date. Some of them, they will take in order received date as spot date. Then we have to take in that date itself. Okay, so that was the spot date. So your spot date, of course, you will have to take in your spot date to identify the spot rate. So the spot date was 31st March 2020. So your spot rate will be following your 31st March 2020, which is RM2.30. So recorded in Florissant's book as at 31st March 2020, okay, will be SGD, because SGD 1 to 230, so you will take in 10,000 divided by SGD 1 times 230. So recorded in your book will be 23,000. Okay, according to the question again, it is paid on 30th April. So since it is paid, so we need to identify the closing date. All right, so now what is closing date? Closing date is spot exchange rate at the year end date. So it is either your year end date or payment date. So whichever is applicable will be my closing date. If I have not made any payment, so I will take in year-end date as my closing date. Okay, so now your closing date will be payment date because you have already made a payment on 30th April. So the closing rate will follow your closing date. So it's 2 ringgit 50 cents. Okay, so payment made by Florissant on 30th April will be 10,000 divided by 1 times 2 ringgit 50 cents. So it's 25,000. So recorded in the book was 23,000, but payment made was 25,000. So there is a realized exchange losses of 2,000. Why? Because at the point of time, at the opening date, we take in 23,000. We thought that we only need to pay 23,000. But who knows that just a 1 month gap, we have to pay 25,000 already. This is foreign currencies fluctuations. Okay, so maybe 30th April, Singapore dollar, their currency is much stronger than Malaysia. So that's why we have to pay more. All right, so there is one. Everyone can understand on this part? Can raise your hand if you can understand on this part? Can, okay, so this part is quite simple. All right, then we move on to the next one. The next one, invoice amount 60,000, paid via 2 installments on 31st August and 30th September. Okay, so the second question was, you have a spot date. Okay, again, you need to identify your spot date, which is your opening date. So your opening date was 30th June 2020. So of course, you have to take in your spot rate based on 30th June 2020, which is 2 ringgit 50 cents. So recorded in Florissant's book as a 30th June 2020 will be 60,000 times 2 ringgit 50 cents. So it will be 150,000. So we have our first installment and last installment because the question mentioned paid via 2 installments equally. So the first installment will be paid on 31st August. Last installment will be paid on 30th September. So we need to identify the closing rate. The second closing date was 30th September. So your first installment, your closing rate based on 31st August will be 2 ringgit 30 cents. Then the next one, 2 ringgit 80 cents. Okay, so payment made by Florissant on 31st August 2020 will be 30,000 times 2 ringgit 30 cents. So you get 69,000. So realized exchange gain or losses. Okay, realized exchange gain or losses. Basically here, since we are unable to identify whether it's a gain or losses, so we will have to calculate first, then only we are able to understand, okay, be able to know. So here, 150,000, they have mentioned that 150,000 will be paid via 2 installments, so divided by 2, so it's 75,000. So I have taken in 75,000, but if I make payment on 31st August, I will have a realized foreign exchange gain. So this is basically a gain of 6,000 ringgit. In my book was 750,000. Okay. All right. And the next one is on the last installment part. My last installment part, payment made by Florissant on 30th September 2020. So we have 30,000. That was the last installment. Times 2 ringgit 80 cents, we get 84,000. And we have realized exchange losses. Why? Because recorded in our book is the balance 75,000 that I have to pay. Okay, but I have paid 84,000. So this is a realized exchange losses of 9,000 ringgit. So from this transaction, basically total, okay, total for this whole transaction, we actually lost 3,000 ringgit rather than a gain. So might as well, rather than paying 2 installments, we pay on 31st August, we will gain more. Okay, so that was according to the question. All right. So this is question number 1-2. Question number 1-3, the invoice amount on 30th September is okay. So here we have spot date and we have spot rate again. So your spot date was 30th September. Your spot rate will be 2 ringgit 80 cents. Okay. So recorded in Florissant's book as at 30th September 2020, we have 20,000. Okay, we will still take in as whole. All right, even though the question mentioned only partially was paid, we will still take in as a whole. This will be our opening date, opening rate, and opening amount recorded in the book. Okay, so recorded in your book will be 20,000 times 2 ringgit 80 cents. So it's amounting to 56,000. So there is a partial payment made, and this partial payment made was on 30th November 2020. So we take in the closing rate of 3 ringgit. So this closing rate of 3 ringgit, okay, will be paid for 15,000 only. And the balance unpaid, as I have already mentioned, if the balance remains unpaid, then your closing date will be your year end date. Okay, so you ringgit 30 cents. So I take in. So payment made by fluorescent will be 15,000 times 3 ringgit according to November. So it's 45,000. So we need to calculate realized exchange gain or losses first. So according to the question, we have recorded 20,000. Okay, so it's 56,000. But out of this 56,000, what is the portion for 15,000? We have to calculate one more time. So 15,000 times 2 ringgit 80 cents minus 45,000. So it's actually a loss making. Okay, we lost 3,000 ringgit. And we have a balance of 5,000 ringgit that remains unpaid. So this 5,000 SGD that remains unpaid, we will have to calculate the closing rate based on 31st December 2020. So your unrealized exchange gain on balance unpaid, we have 5,000 times 2 ringgit 80 cents. Okay, this is basically the opening, the spot rate. Okay, and minus 5 ringgit times 230, this is the closing rate. So now we have an unrealized exchange gain on balance. And it would be a gain for me. So from this transaction, we have lost 3,000, we have gained 2,500 unrealized. Okay, so if I made the payment, so maybe I will just lost 500 Singapore dollar. Okay, so that's the difference between realized and unrealized. So realized is on paid amount, unrealized is on those unpaid amount. Okay, so that was for your question number 3. So for this part, can you all follow? Can raise your hand if you can follow? Can, okay. If can follow, then we will move on to the last one. So this part, it means it tells you that it remains unpaid. So remains unpaid, we just calculate unrealized exchange gain or losses. So we identify the spot date and spot rate. Again, this is based on the invoice date, okay? And then we have recorded in the book will be 30,000 times 3, so you get 90,000. And all the balance remains unpaid. So unpaid, we take in 30,000 times 2 ringgit 30 cents. Times 2 ringgit 30 cents is 69,000. So we have unrealized exchange gain of 21,000. Because recorded in your book 90,000. If you make payment on 31st December, it is you only need to pay 69,000. So there is a gain of 21,000. But this is unrealized because the amount was unpaid. Okay, that was your question 1. The next question basically is on explain 3 factors that an entity should consider in determining functional currency. Sorry, yeah. Okay, so 3 factors that you should consider in determining functional currency. So as I have mentioned just now, I need you all to understand what's the difference between functional and present. Primary economic environment in which the entity operates. So it's an operational currency. So let's say if you are operating in Malaysia, your functional currency should be Ringgit Malaysia. If you're operating in Japan, your functional currency should be Japanese yen. That was functional currency. So what are the factors that you have to consider to determine the functional currency? So I have already stipulated here. Okay, so you can actually see on your own. So the factors to determine the functional currency. Let's say we are in Malaysia, the borrowings that we obtain also in Ringgit Malaysia, then that would be the functional currency. We are in Malaysia, all the sales invoice and purchases invoice will have to be recorded in ringgit Malaysia. That was functional currency. Okay, so that was part of the functional currency. As for presentation currency, it's the currency presented in the report. So if you are transacting in Malaysia, you can present Malaysia. But some of the companies whereby they are particularly a subsidiary to an overseas company, then their presentation currency could be ringgit Malaysia and the overseas currency. Let's say I'm a subsidiary in Australia, so I will have to present my presentation currency. Okay, present my currency in annual report. I have to present ringgit Malaysia and Aussie dollar. Okay, so that was presentation currency. That's the difference of it. All right, so if you want to know what's the factor that an entity should consider in determining functional currency, as I have mentioned, sales invoice, purchases invoice in ringgit Malaysia. Second thing, borrowings, sales invoice and purchases invoice based on the currency that the country has already designated. Second, borrowings must be based on the currency that the country has designated. And the last one is your labor, wages, everything. The expenses that you are incurring is based on the currency that the country has already considered in determining functional currency. All right. The next one, Grade CFO is a PLC in Malaysia. Financial statements are prepared in accordance with IFRS and closes its financial statements on 31st December each year. CEO of the company would like to understand about the accounting treatment for foreign currency transactions. The company is currently dealing with foreign consultants for an ongoing high-rise property project. So I had come across a check for 60,000 payable to PACO. So this is on 1st November 2020. So when you look at this first statement here, you will definitely have to come into conclusion that this is the spot date. Okay, sorry, let me add in the comment. So 1st November 2020, do I have the comment? Okay, 1st November 2020 will be the spot date. Okay, so this 4 ringgit, it should be based on your spot rate. We owe them USD 30,000 and the invoice is dated 1st September 2020. Oh, sorry. I have to cancel first. This is they have mentioned, okay, so this is basically the closing already. So let me just rewind it, comment. So this is the closing date and closing rate. Okay, so according to the record, we owe them 30,000 and the invoice is dated 1st September 2020. Okay, so this is the spot date. Okay, in the list provided, USD 30,000 amounted to 105,000. So this is calculated based on the spot rate. All right. And so we should pay PACO 52,500 since only half of the amount is being paid. Why are we paying them more? Please explain on the half payment date and what. So this, according to the question, so we already have our closing date and closing rate. And this is basically the spot date. And this is calculated based on the spot rate. So we already have our spot date. We already have our spot rate, we have our closing date, we have our closing rate. But the CFO cannot understand, the CEO of the company is unable to understand why is there a differences. Okay, so according to him, 105,000, we should pay 52,500. Why are we paying them 60,000? That is because of foreign currency transactions. Okay, so we have this conversion and translation. So basically, this is a conversion, a process of exchanging amounts of one foreign currency for another. So we are experiencing foreign currency conversion here. Translation means that we still hold the assets or liabilities at the year end. Okay, so translation, if let's say it remains unpaid, then there is a conversion and translation. Conversion on the 15,000 paid, translation on the 15,000 unpaid. Okay, so how are we going to answer these kind of questions here? So the first thing is you have to tell people foreign currency transactions, they are initially recorded at spot exchange rates. So spot exchange rate refer to the rate when we receive the delivery or the rate when we receive the invoice, whichever is applicable. And based on this situation, invoice date is on 1st September 2020. So this is the spot exchange rate. The transaction has been recorded correctly on 1st September 2020, following spot exchange rate on 1st September 2020. Foreign currency monetary amounts will be reported using the closing rate. So here we are paying half of the USD 30,000 on 1st November 2020. So the closing rate will have to follow 4 ringgit, USD 1 to 4 ringgit. So here, USD 1 to 4 ringgit. All right. So according to the transaction that the CEO refused to understand on this part, why are we paying them more? And if you pay them more, what is this actually? So here we explain to them, this is the realized exchange losses from the conversion of foreign currency transactions. On the balance unpaid, the closing rate will follow the rate on 31st December 2020, and the exchange differences that arises will be reported in the statement of profit or loss as an unrealized gain or losses. Okay, so for payment that has been realized, then we calculate realized exchange gain or losses. For the balance unpaid, then we calculate unrealized gain or losses. Okay, so that was it for your question number 2. Everyone can understand on this part? Can raise your hand if you can understand. Yes, thank you, Meiji. What about the rest? Okay, can okay, so if can understand, then I will move on to the I'm not really currently focusing on this chapter 11 and chapter 12. Okay, so because this is IAS 29, financial reporting in hyperinflationary economies, although it is very important, but I find that the things that you are learning about this chapter is rather, it's rather little, I can say. That's why I don't really want to focus on this part yet. If I really want to test, I will test on more complex issues. Okay, so for this part, question number 1, Happy Fresh Sdn Bhd is considering to purchase a retail shop in Kuala Lumpur. Market value of the shop 500,000, cost to acquire 50,000. Happy Fresh expects to use the shop for a set period of time. Discounted future cash flows from its use are calculated to be 650,000. Cost to return it back to original state will be 50,000. And you need to calculate the historical cost if purchased at market value, fair value, and the value in use of the shop. Okay, so for here, your historical cost, they want you to calculate shop of 50,000. So we have to take in. So we are actually capitalizing 550,000 in our book. That is historical cost. All right. Your fair value equals to market value. So it's 500,000. Your value in use here, according to the question, 650,000, we have an estimated cost to return it back to original state. So 650 minus 50,000, we get 600,000. That's it for question number 1. Question number 2, Tara Berhad owns a building in Kuala Lumpur, which it currently rents out to another entity. So which 2 bases of measurement would be the most suitable approach in this scenario? So Tara Berhad owns a building in Kuala Lumpur, but it is currently renting it out. So the 2 bases of measurement that you can see from this 2 pages, I think it's 2 pages notes only. Yes, 2 pages notes here. So we only have a few that we want you all to learn. You have fair value, you have value in use, you have current cost. So the difference between current cost will be my years old, what is the current value? That is current cost. So the difference between current cost and fair value, it is almost the same thing. It's just that fair value, it is based on market participants, yes, for active market, yes, and fair value is for new products. We can say that, okay. Current cost is for old products, but current cost works similarly with fair value. Okay, so we have these few basis measurement and historical cost as well. So when I look at the picture here, Okay, so they are currently renting it out to another entity. So if I rent out to another entity, I know that basically, number one, I have a fair value. Okay, I have fair value. I can measure at fair value less cost of disposal. Or another thing, I can measure at value in use. Why? Because value in use talks about usage, using the assets. The value if you use the asset, that is value in use. All right. So what are the two bases of measurement that is more appropriate? Value in use, because Terra Berhad is currently renting out, so they are using the property. So you can estimate future cash flows easily. The fair value obtained from an open market. Okay, so here you can use these two bases. Question number 3, AFA Berhad makes specialist military vehicles and they are unique. So they have to purchase a specific plant in order to make the relevant components, and the supplier has to make changes unique to AFA Berhad's business. So they are unique. And fair value here, we are talking about if there is an active market. If there is no active market, then we cannot take in fair value. So we know that fair value is out, current cost is also out. So the only option we have will be value in use and historical cost. That's how we measure. So which would be the suitable measurement basis? So according to this, basically we only have historical cost and value in use. So unique asset will generate revenue for AFA Berhad. That's why since they will generate revenue, we know that we will use the asset, so apply value in use. And another one will be historical cost. Why? Because they are unique. There is no fair value, there is no current cost in the picture. Okay, so the next one, why might users of the financial statements have concerns about the accuracy of the carrying amount of non-current assets valued using the value in use basis? Now, value in use equals to net present value of future cash flows. So how do you compute value in use? I hope everyone still remember. Okay, so we have estimated cash flow, we have discount rate. So how to identify estimated cash flow and discount rate? They are solely based on management's judgment. So this estimated cash flow is actually a future cash flow, also a prediction. It is also based on the management's judgment. Discount rate equals to borrowing rate, also based on the management's judgment. That's why since they are based on the management's judgment, users will find that it is very easy, which means they perform some creative accounting and their calculation might be overly biased. So that's why users of the financial statements, they do have concerns in measuring the accuracy of the carrying amounts valued with value in use. Okay, so that was it for your chapter 11. Now I straight away move to chapter 12. So chapter 12, the first question, a new academy school SMK Pinta has been opened in an area of high social deprivation, replacing a school which was closed as a result of poor academic performance. SMK Pinta is funded directly by central government. Some critics claim that too much money has been spent on it. So in what way would you expect the Ministry of Education to monitor the performance of the school? So basically, you can answer this question based on your concept, based on your perception about TAR UC. It is actually the same. TAR UC was once funded by government partially. And in order to measure the performance of the school, which means to maintain the quality of TAR UC, you can actually think from your perspective, what are the methods that you want to have in order to maintain the quality of TAR UC. Example here was like students and parents feedback, and of course the value for money. Okay, so the students and parents feedback is very important because basically you have to measure the performance of the lecturers, the performance of the tutors. You want to know whether they are performing or not. You want to know whether you learn something from them or not, learning outcome achieved or not. Okay, but of course this is like a two-ways communication issue lah. Sometimes students give bad ranking about the lecturers, but it doesn't mean that the lecturers are really that bad. Okay, some of the lecturers, they are good. It's just that maybe they are hot-tempered a bit. They like to scold people, and then students give them bad rating. They dislike the lecturer. wisely. Okay, then if then the communication will only be effective, or else it will not be effective, because if you are saying that the lecturer is not good, okay, because I cannot pass my exam, so it's not good, then this is considered as a biased thinking already. If you really want to measure correctly, you want to measure in a fair manner, then you must really think in two ways. Okay, but that was part of the answers lah. Okay, in order to measure the performance of the school, part of it is the students and parents feedback. Okay, another one is value for money, what the money has been spent and how the management of SMK Pintar spend the money. Of course, if we ask for money, we will not spend unwisely. Definitely must spend wisely. Just like if we receive grants or funds from government for Thai UC, we will utilize the funds wisely. We cannot simply say, for we receive so much fund, then we declare bonus lah. We declare bonus for every. Okay, because government's fund came from your parents' money. We cannot simply just use up your parents' money for nothing. So most of the time when we propose, we will tell government, okay, we need 20 million. Why? Because we want to build another hall, let's say, for the students' comfort, something like that. Then it would be considered as value for money. All right, that was question number one. As for question number two, there are those who suggest that any standard setting body is redundant because accounting standards are unnecessary. Other people feel that such standards should be produced, but by the government, so that there are a legal requirement. So discuss whether or not the financial statements of not-for-profit entities subject to regulation. So here, there's a few points to consider. So it was funded by public, all right, non-profit organizations funded by public. Second, you receive a large sum of donations. Third, you are operating the same way as profit organizations. The only difference is that non-profit organizations, they are not adhering to any accounting standards. There's no dividend payout, and most of the time, the users will believe that the monies that they have donated are for charitable purposes. The people in the non-profit organization might not share the same objective as the founder. So maybe the founder has a very big heart. He or she really wants to help people, but the person that they are hiring might not have that big heart. They might just want to join non-profit organization for the sake of earning an income. And maybe from there, they can do some money laundering work. They can take more money or earn more commission from the transactions. So it is not really sharing the same objective as the founder. So based on these few points here, of course, it is important that non-profit organizations, they are also subject to regulations, just like SME, just like PLCs. So of course, we can argue that non-profit organizations, they are not required to report to anybody. That is true. They are not required to report to anybody. But you have to understand that if you use charity, okay, you use charity for fraudulent purposes, fraudulent reporting, you use charity to run something that is illegal, that makes that you use public's money, okay, not for charity purposes, it's for your own reason. Of course, it is not going to be good in the long term, okay, because people someday they will have that kind of mindset that they won't believe in charity organizations anymore. Just like currently, actually a lot of people, right, they don't really have faith in non-charitable organizations, non-profit organizations anymore, even though we know that they might be there for some good reason. Too many money laundering cases that are involved. That's why, of course, it is important that non-profit organizations, they are also subject to regulations. At least it boosts the confidence of the users of the financial statements. Okay. So basically that was it. So for question 12, so for this tutorial 12, it is not really my my main concern as well, because specialized not-for-profit and public sector entities, you need to learn, okay? But I will not test you in your exam because it is too easy to test. And if I ask you questions, right, I will ask you based on your own critical thinking questions, and it will be very difficult for the students to answer. That's why I don't want to test in the exam. Okay, for this part, that's why I just go through only with all of you. All right. So any questions you want to ask me, can understand on these parts, can raise your hand if everything is okay, or you want me to repeat. Completed all the tutorials, huh? I have already completed everything. Okay, so the next week we will have this intensive revision. I'm currently preparing the questions. Okay, and once I have already uploaded it, I will expect everyone to do. Next week, I will want to see the students' answer rather than myself showing you my answers already. I will discuss based on your answers, just like the first two tutorial classes. Okay, so if there's no questions, thank you very much, everyone. Have a nice day, and I'll see all of you on Wednesday. Bye bye. Yes, don't worry. I will try to furnish it by tonight if possible. Okay, Zihong? Hmm. Yes, because I also want to release the results fast. Basically, it's manageable, right? The questions. Okay, bye bye. Should be manageable. The question cannot tell me very difficult already. Okay, bye.